Welcome back to the Deep Dive, where we cut through the noise for you. Today we are doing a focused deep dive, jumping straight into the Colombo Stock Exchange. We're pulling from the key market reports covering November 17th through the 21st.
Exactly. And the goal here is pretty simple. We want to take all this data and just distill it into a quick educational summary for you. What did the indices do? Which sectors made big moves? And what was the general feeling out there?
So what is that general feeling? What's the big picture from this past week?
The overarching sentiment was definitely bearish. You saw the ASPI, the all-share price index, take a clear dip, and liquidity tightened up a lot. Less cash was moving around. But the real headwind, the thing that keeps coming up, is that net foreign selling.
Okay.
But what really stands out is this incredible polarization. You have capital goods reporting these massive triple-digit gains, and at the very same time, consumer sectors like household products just got hammered.
Okay, let's unpack that with the hard numbers. The ASPI closed on the 17th, that's Monday, just over 23,200. By Friday the 21st, it was down to 22,982, a noticeable pullback.
And that pullback went hand in hand with liquidity just drying up. We saw total turnover plunge from roughly 4.46 billion rupees on Monday down to 3.82 billion by Friday. That's a pretty rapid drop. And that signals, caution, cooling interest. Market cap also shrank from 8.32 trillion rupees to about 8.22.
So that's the overall market.
Yep.
But you mentioned these wild extremes in the sectors.
Yeah, this is what's fascinating. The biggest positive change was in capital goods. It soared by an incredible 127.38%.
Wait, 127% in a single week?
In 1 week. And this isn't just, slow organic growth. The research suggests it's tied to these big expectations around government infrastructure bonds, future projects. You have all this capital just rushing into these specific industrial segments.
That level of volatility sounds more like a speculative bubble than a sustainable trend, doesn't it?
It's definitely a short-term rotation. It's news-driven, and you can see that volatility when you look at the other side of the coin. So you contrast that huge gain with the downside. Household and personal products, they dropped almost 27%.
A 27% drop.
Yeah. It shows money is aggressively leaving those essential consumer areas and just flooding into things like utilities, which were also up by almost 60%.
So we know where the money was going, but who was actually moving it? When you look at the top movers, what do you see?
Well, you see huge turnover concentrated in the core financial sectors, the big banks.
Like Commercial Bank, HNB.
Exactly. Commercial Bank, HNB, DFCC, and also diversified financials like LOLC holdings. They were all over the activity pages. And these are your bellwethers, right? Mm-hmm. They often reflect domestic investor confidence. Mm-hmm. And beyond just trading, you had other things keeping the market busy. Cash dividends were announced, some director changes, appointments. That kind of foundational activity is always there, which is a good sign.
Okay, but now for the critical signal. Foreign investors. Their reports show them selling consistently.
This is the key pressure point. On both Monday and Friday, foreign sales just swamped the foreign purchases. And this kind of persistent selling, it puts downward pressure on everything. It lowers the value of foreign holdings in the CDS, which is basically the official record of who owns all the shares.
Right.
It just signals broad caution from the international community.
So that brings up the big question for, domestic investor listening to this. When you see that much foreign capital flying out and the liquidity's dropping, is that a massive red flag telling you to stay away? Or is it creating a huge buying opportunity by pushing down the prices of otherwise strong companies?
And that is the tension point, isn't it? That's what you have to grapple with. I think the biggest lesson from this week is to see that divergence. You have this rush into industrial goods, and at the same time, an exodus from consumer stocks. That intense, concentrated rotation is what defines the market right now, and it's what you really need to be watching next week.
A lot to think about there. Use these data points, especially those extreme sector moves, to inform your own research. Thanks for joining us for the Deep Dive.